What's up, everyone? So I'm going to give an update for this week on GME. Before I do that, just want to show a quick recap of my last video. So I'll play that now. Just take a look at cat. This is the only one I could think of off the top of my head, but it's a pretty good one. This is exactly what we can expect. So, cat made a very, very similar thing. Came down, hit a bottom. So, for example, GME 22 would be right here. Makes the recovery. It gets sticky around the hourly trigger because nasty hourly velocity to the downside, right? And you could see very similar setup. You had the low, and then you had another marginal low, right? Let's say this is 22.40 and then 22 bucks. The hourly velocity diverged a little better here, but we still had hourly divergence, and then it gets sticky around here at the hourly trigger because coming off a nasty downside velocity like this is telling you that price isn't going to just be able to run away to the upside. It needs to do some time, pinning around the hourly trigger first. But then look what happens. You get back above the hourly trigger and you run straight to the daily trigger. You remain above the daily trigger, and once you break through the monthly trigger and the weekly trigger at once, price was 189 here. Within 10 days, it was $40 higher. $40, right? So again, these are very powerful triggers, and they work. You could see like the two perfect rejections here. Because the weekly velocity was strongly negative here. The weekly velocity was negative here as well, and the weekly velocity was negative here as well. And you could see when price broke through the trigger right here, it was all the way at the end of the week when the negative velocity is at the weakest, because the negative weekly velocity, or the weekly velocity, is calculated Friday after close. So it's calculated like right here. On this Friday, it was calculated for this whole week, but the closer price gets to the trigger, the less negative velocity will be. So I'm looking for something very similar to cat. This is what I think is about to unfold. I think we're going to come out of the hole. We're gonna thrash around by the hourly trigger for a bit. We're eventually going to break above, move over to the daily trigger, maybe a little bit more of thrashing, and then pop above. That's the upside. So that was our video from Sunday. Now let's check how we did. So GME, take a little zoom. So, came down, made this low. Nasty hourly velocity, but we had divergence at the bottom. So when price was 22.50, hourly velocity was negative 2237. And when price came down to 2209, hourly velocity was negative 2230. So the velocity here was more extreme than it was when price made a new low, telling us that, price is ready to start its reversal. Sure enough, we come right back to the hourly trigger. We get pinned a little bit because of the nasty negative velocity we just came off, and then price, as soon as it lifts off the hourly trigger, attacks the daily trigger. If we take a closer look and look at the day trader chart, price was actually forming a 3-trigger cluster. So here was your nasty negative downside velocity. Now we had this clear 3 5-minute divergences. So here was your lowest low, and then price made a new low right here, and the 5-minute velocity diverged bullishly. Another low, 5-minute velocity diverged bullishly, and on your third low, third 5-minute bullish divergence, that's when we start the reversal, and price comes up straight to the hourly trigger. Now, because the 5-minute velocity was able to diverge so well, that's what gave us a bullish hourly divergence. So then we came up and we had to spend some time pinning around the hourly trigger because we just went through this nasty downside negative velocity. So it's not just going to be an easy break above. But then, as you can see, price forms into a 3-trigger cluster setup. So all 3 triggers are really clustered together. And now the way we do this is that we go long on a 3-trigger cluster setup as soon as price breaks above the hourly trigger with the stop loss right below the 5-minute trigger. So, 10 cents below. So the 5-minute trigger here was 24.63. Our stop loss would be just about 24.50. And when coming out of a strong 3-trigger cluster setup like this, you can expect price to move really well to the upside, with the 1-minute trigger and the 5-minute trigger providing support on the whole way up. And sure enough, that's exactly what we saw. You could see the hourly velocity actually getting increasingly better with each hour. So that's a really bullish sign. As price is moving up, hourly velocity increases. So again, Anemoi is predictive. So in this hour, price was in this range, and then before the next hour started, we got this hourly velocity print telling us that Anemoi thinks GME is about to move higher, and sure enough it did. And then before this hour started, before all this trading happened, we got this print, hourly velocity rising. So Anemoi is telling us that GME wants to move even higher, and sure enough we did. And then before this print, we got this hourly print. Before this hour of trading, we got this hourly print. And we could see that for a bunch of straight hours, the hourly velocity is continuing to climb, and so we can expect to keep moving up, and sure enough, that's what happened. perfect. Now, when we reach this top area, we look at the lower time frame velocities, you start seeing some divergence. So with this high, velocity was 0.039. With this high, velocity was 0.043. So everything's healthy, we can expect a bigger push up. Then with this high, we got 0.0477. So, everything's healthy again, and we could expect another push up, because with each high, velocity is making a new high. But once we start making this high, and this high, you have 3 bearish 5-minute divergences. Now, the hourly velocity is very healthy, so we're not going to expect a full reversal all the way down, but we are going to expect, some cool off and consolidation. Price comes back down towards the 5-minute trigger and starts consolidating. This was very normal. This high, now the reason why the velocity started diverging up here is because we were testing the daily trigger, 2610, with negative daily velocity. So you can see that the velocity on the daily level was negative, and therefore as we started coming up here, the 5-minute velocity started to diverge because sellers were a lot stronger up here. This is where they're going to be able to contain price, and if there's negative daily velocity, then the daily trigger will act as resistance. Going into next week, there's no negative daily velocity. It's negative 0.0006, which is negligible. Price has the ability to break right above. So that's basically how we tracked this move out of the hole for GME. So let's get into the forecast for the next week. So one, we know that the daily velocity is not going to be a problem anymore for this 2611 level. So it is very possible the price could just break out to the upside and run. But if we take a look at, CAT, which was a very similar setup to this, we do know that we spent some time pinning around the daily trigger. So something like this. So before price can just make a, crazy move straight up, I do believe we're going to need a weight above the daily trigger. We're going to need the hourly trigger to cross the daily trigger for us, confirming that we're bullish. And then we're going to need some time to get rid of the negative weekly velocity. So what do I mean by that? Let's go back to GME for a second. The stronger the velocity is, the more we have to expect the trigger to provide support or resistance. So if we remove everything else, we can see that the weekly velocity, because price was not close to 30 at the end of the weekly velocity became a drop more negative, but it's negative to the point where we can't expect a clean break of the weekly trigger at 30.17 and start breaking to the upside. So what we need to do is we need to spend around a week right now, in my opinion, just drifting sideways or moving up slightly, getting as close as we can to that weekly trigger at 30.17. This week does not seem like a runaway move to the upside. If I'm surprised to the upside, excellent. I have no problems with that. But I think we're going to need to wait a little bit. And the reason why I think that is because, first of all, the hourly trigger didn't even cross the daily trigger yet, and price didn't even cross the daily trigger yet. So the perfect scenario this week would be to see price break above the daily trigger. The hourly trigger will start curling up and come above the daily trigger, like here, and then we get a test of the monthly trigger. Now, when we got this crosshair and then the test of the monthly trigger, we know that the monthly velocity was horrible, negative 3.7. And so Anemoi was very unfriendly to the idea that price was going to be able to break and hold above the monthly trigger. Now the negative monthly velo was cut by almost a fourth. So at this point, price can break above the monthly trigger, but the weekly velocity is still negative. So we want something similar. We want a crosshair. We want the hourly trigger to cross above the daily trigger. We want price to be in this range between 26.11 to 29.86 this week. The closer we close towards the weekly and monthly trigger by the end of the week sets up the move for next week. Now, if we close in the 28-29 area, then next week we are fully set up to break above these two triggers at once. They're going to be really clustered together, 29.88, 29.86, and we know how each trigger acts as an acceleration level to the upside. We could see price breaking above the daily trigger here and flying. Got rejected here and here because of the negative daily velo, but once price was able to break above, it's a really strong acceleration level. The weekly trigger and the monthly trigger are the strongest acceleration levels. When price breaks through both of them at once, or even one at a time, it's a really strong move. But when they're clustered together, that's when you see incredible, powerful stampedes to the upside, like we saw in CAT, which moved from 182 to 230, almost a $50 move in the span of 10 days. So although I don't think we're ready for that move just yet, I do think that that we have a large possibility of that happening, but we need a week to repair the negative weekly velo. So, we repaired the daily velo, right? We repaired the daily velocity by moving up as close as we can to the daily trigger. Now we repaired the negative daily velocity, so moving above 2611 is not going to be a problem. However, because the weekly velocity is still so negative, we are not ready to just come up and break right above. And so best case scenario, we pop above the daily trigger, we hover around here, the hourly trigger crosses above, we spend the week climbing and climbing and climbing to get as close to here as possible. If we do break above these levels at any point this week, a pleasant surprise would be to remain above, but the most likely scenario and what we have to kind of expect is a either pin here or reject and come back down. But then as this week closes, as we end this week and we're close to this level, we're between 29 and 30 or even 28 and 30, then we're set up to absolutely explode because the negative weekly velocity will be negligible. There will be barely any negative weekly velocity. Like, for example, here, when there was barely any negative weekly velocity, we were able to break above and have a really nice upside move. Then the weekly trigger caught support, and we made another upside move. But this week is all about just trying to get as close to the weekly trigger as possible to set up next week, no negative weekly velo, and there's our moonshot. Now, you know, bad things can still happen. The setup isn't perfect yet. Any break below the hourly trigger would put a delay in, you know, a big run to the upside. So just keep your eyes out on 2507 this week. It'll rise every couple of hours. You know, you could view this chart for free if you want to keep an eye on it. And that's the only invalidation level. The only invalidation for this setup is to break below the hourly trigger at 2507. But it'll be very interesting to see how this week plays out because, you know, the closer we end this week at the weekly trigger means the more they're losing control. So just keep a close eye on Anemoi, and I'll give the next update when